Bayer is making headlines once again. Following talks with politicians, shareholders and environmental activists, the company has conceded that it must make changes. They promise to invest €5 billion in research over the next 10 years to develop a more sustainable alternative to glyphosate. In the PR campaign, however, Bayer is repeating its same old mantra: glyphosate is safe when used correctly, and it wishes to continue selling the product. But the very existence of this PR campaign shows Bayer is feeling the pressure. Court cases in the US have done particular damage to the company's image and their bank balance. Bayer was sued for $2 billion in May by a married couple who both got cancer, and a further 13,400 people have filed lawsuits. Their dented reputation is reflected in the share price, which has almost halved in just 1 year. Shareholders are understandably disgruntled. And they didn't hold back against CEO Werner Baumann at the annual shareholders meeting in April. They fear the acquisition of Monsanto, and with it the weed killer Roundup, could spell the end for Bayer. Environmental activists are just as unhappy. They pointed out the potential risks of glyphosate long ago.
DW's Gerhard Elfers is with us to talk more about this story. Gerhard, what are we seeing here from Bayer? Is this an about face?
Well, not really. It's they're not stopping, or they're not getting out of glyphosate. They're not taking it off the market or anything. It is, as our colleague said in the piece, it is a PR exercise. These are the ads they've put into a variety of newspapers today, both in Germany and in key markets like the US and France. It's a bit of a greenwash. They say they want to invest €5 billion in alternatives to glyphosate that are more sustainable, but at the same time, they insist that glyphosate is still safe, they continue to produce it, and they continue to make money with it.
Is Monsanto becoming a huge liability for Bayer?
Well, it looks like that. And Bayer shareholders definitely say it is. Why did they spend $63 billion to buy Monsanto, they asked. The share price is slashed by half, and the management should have done their due diligence. They knew about the lawsuits. They knew that US juries tend to decide for the plaintiffs with big damages. So shareholders are asking, why is that the case? But on the other hand, the share price has dropped. The share has lost $20 billion in market value. That is much exceeds the actual legal risks. Analysts say that while these court cases go on appeal, that they will be reduced, and the real legal risk for Bayer is €1 to €6 billion. So that is roughly what they can expect. So it might not be as bad as we all think, but definitely, whether or not you believe that glyphosate causes cancer or not, whether it's dangerous for humans or not, it definitely has been toxic for Bayer as a brand.
Yeah, this company's certainly taken a big hit there. Gerhard Elfers from DW Business, thank you very much.